Hi everyone, this morning I had to look at some alts to see which ones have great potential and look good from a risk to reward ratio perspective. One of the alts that I found is ICP, which is the chart that I have in front of me. So now let's cover my Elliott Wave analysis on ICP, including some important support and resistance areas and two potential setups, one more risky and one a lot more safe. Now this is the weekly time frame Coinbase chart with an all-time low of 2.825. And you can see that I only analyzed the right side of the all-time low. And that is for good reason, because this move up here is the first time on a weekly time frame that we can easily identify a big five-wave move towards the upside that breaks the downtrend. And that is something that I will always wait for. As long as price is not showing a easily identifiable big high time frame impulse to the upside, I have no interest in all of this because I don't want to risk my portfolio or risk my money trying to snipe the all-time low. Instead, I patiently wait for a big impulse to the upside, which I will completely miss, and that's fine. Then I wait for the retracement or the range to follow, and that is the moment where opportunities will come my way and I can attach probabilities to it because now I have information that I can work with, which is the reason why I now also present this chart in today's video. And in a way, it is quite similar to SUI. And we analyzed SUI a long time ago already. We started analyzing this asset. Price here moved to the downside, zero interest. Then you get a nice double 1-2 impulse up with a multi 4-5 at the end. That is your wave one. You look for a corrective retracement to the downside, which was a double zigzag on the lower time frames, touching support levels. And that is a moment it is interesting to look for price to move to the upside and create new all-time highs. In this case, of course, taking out the high here, which then happened at a later stage. So what we are looking for here on ICP is a five-wave move towards the upside, an impulse, with the highest amount of volume in your wave 3, which is exactly what you like to see. Followed then by the retracement. Now this move to the upside is in a bullish scenario counted as a wave 1. The retracement is then counted as a wave 2. The most common target area for a wave 2 is the 0.5 to the 0.786 Fibonacci taken from the start to the end of your wave 1, giving you a target area between 7.7 and 4.3. Now you can see that price here touched the 0.786, or actually you can't really see it because of the fib time. Let me quickly remove it here. So you can see the wick into the 786, which would be a maximum target for a wave 2. Now the vertical line on my chart, that's a fib time, which is taken from the start to the end of wave 1. And basically what it does is it compares wave 1 in time with wave 2. Wave 2 here, if this would be the low, ends exactly on a 2 fib time, meaning wave 2 is twice the length of wave 1, which is perfectly fine. And you can also see here a little 1 on the chart. And this is a 1-to-1 trend-based fib extension taken from the start to the end of A to the end of B, comparing wave A in size with wave C in size. And the most common target for a wave C compared to A is the 1-to-1. So it is quite nice and also quite interesting that price is reacting at the 1-to-1 in confluence with the 786 on a 2 fib time for a potential end of your wave 2. Of course, there's always the potential that, yeah, maybe you get another 4-5, but you only really want to sweep the low. You don't want to touch the 886 at 3.55 because that would significantly lower the probabilities of this over here being a wave 2 and would arguably be more bearish. But at the moment, I positioned wave 2 here at this particular low. Now, after a wave 2, you like to see a wave 3 towards the upside, which then gets us talking about what I put there on my chart, like the green line and the blue line. Now, the blue line is your wave 3. So that is your wave 1, your wave 2. You look for 3, sideways 4, and 5. Generally, a minimum target for wave 3 is the 1.618, a trend-based fib extension taken from the start to the end of 1 to the end of wave 2, which currently I put at the low over here. Now the 1.618, after being touched, eventually, maybe you go to the 2.618 or higher, but generally the 1.618, you eventually expect a sideways 4 and a wave 5. But it doesn't mean that if price cannot reach the 1.618, which by the way, if you want a price, it's sitting at 107, which of course is insane. We're currently sitting at 5. So not yet completely sure if I want to use the more logarithmic targets or the linear chart targets, with the linear chart being a target of 33, which does sound a bit more sensible in a way. But this is the reason why I didn't include the price in my fibs here, right? It's more about the fibs than the price at the moment, because wave 3 nonetheless should be a big 5-wave impulsive structure. But if we don't reach the 1.618, right, it doesn't mean that it is bearish, because you can also form a multi-1-2 where you have a wave 1, you get your wave 2, you form another 1, another 2, and then you start your big wave 3, which actually is more bullish. A double 1-2, you expect a bigger wave 3 to the upside, followed by 2 4 5s, leading to much higher prices. Also, this wave 1 does not necessarily need to take out the all-time high per se. This wave 1 does not need to move to the 1-to-1 trend-based fib extension, right? You can also have an internal 1, 2, 3, 4, 5, so inside this range, that maybe touches the 886 taken from the high to the low, then get a corrective move down. That is most important. So you want an impulse up, just like we had here, and then another corrective structure down, right? That is what you are looking for in both wave 2s as well as wave 4s. And then you're looking for price to continue towards the upside. Now the invalidation, of course, is the all-time low, and the bearish scenario is counting this impulse up as a wave C of a flat structure. A, B, and then a wave C towards the upside. For me at the moment, lower probabilities, right? It's an alternative for me, but this is also where risk management comes in, and we have to keep an eye on what price, of course, is doing locally. But if this would be a flat ABC, then you would look for price to continue down impulsively. So preferably you would look for another wave 1, 2, 1, 2, and then get a big wave 3 to the downside to absolutely 0, basically, right? So yeah, at the moment, an alternative, this is what I keep an eye on for now. And the invalidation is very easy. It is the all-time low. So, it makes trading this asset or, investing in it incredibly easy. You easily know your invalidation. Now, if we then look at some confluences on the chart, then price touched my support box over here. Now, this support box contains a monthly order block. Actually a weekly one, not a monthly one. So it's the order block on a weekly chart, this red candle. And the monthly thing I wanted to talk about is a monthly point of control. So from a month here in the past, the month of November 2023, the point of control was touched here with this particular low. Now to the downside, of course, at like around 3, we have some more support locally at 4619 to 4610. To the upside, first area of resistance, weekly naked point of control at 5.329. And then you can see we have some gaps towards the upside, right? If we can flip this level and move up, break the high here at 6.12. Next up, 7.232. And then we get to some volume levels again. So the red levels are volume levels. The colored levels like yellow, purple, those are time frame horizontals. Now, I am personally mostly a fan of volume, so the red levels for me are always the primary ones that I keep an eye on, which means that to the upside, those are my most interesting areas of resistance. And you can see that also here, we have a monthly naked point of control and a weekly pretty much at the same area, being around a 14.5, 14.6. Now then I like to talk about Elliott Wave Simplified. So without counting this structure here in detail or this move towards the downside, it starts to be quite interesting to look for a bit of a reversal to the upside anyway. And what I am going to explain now on this chart is related to what I talk about in the Elliott Waves Beginner's Guide on my channel, the first video here, the simplest way to use and trade Elliott Waves. It literally changes your approach. It's super easy. You don't even need to count, right? It's more about structure. But you still use Elliott Wave knowledge, even though you might not know really a lot about Elliott Waves. So if we look at this move to the downside, right, of course, we have our first structure, second structure. But in an impulse to the downside, what we like to see is a bit of a grind in the beginning, then a sharp move down, and then we like to end an impulse with a bit of a grind again, preferably on a declining amount of volume. Now you can see that here we had our messy start, then we get acceleration to the downside on peak volume as well, right? And then we start to create lower lows on price on a lower amount of volume. And this is like a bit of a signal that a move to the downside starts to get exhausted, right? A reversal might be coming soon, and then preferably a reversal touches at least the 0.382, sitting at 6.915. That is generally a minimum target for a reversal, and this fib is taken from the high to the low. So just by observing the structure here, it also becomes quite interesting to look for price to move towards the upside. We have a bit of a grind, quick move down, and then a bit of a grind. And you can see that I suppose, I don't know exactly how to explain it. The curvature, I suppose, the curvature of the chart, right, is steep move down here, and then you start to curve, right? And volume is declining. So it becomes interesting to look for a bit of a move towards the upside. Now then we have the potential setups that I like to talk about. Now you can also see the more risky one is the one on the left, which is where price is now over here. Stop loss at the invalidation if you are sensible, of course, or if you want to take even more risk, of course, a stop loss can be put at this particular low, right? But yeah, I mean, I just have the invalidation of an Elliott Wave scenario as the stop loss here. And then look for price to eventually take out the all-time high. Because if this is higher probabilities corrective, you look for price to take out the high, which then would be a minimum target. Now the reason that this is more risk is because your bearish scenario is this being a wave C. This is then a 1-2, maybe another 1-2. So you do retrace back to the upside into the 382 and maybe some other fibs. But this then is another 2, and you look for price to move down and take out the low, and down you go basically, right? However, if price can touch the 886, and now we get to the less risky scenario. If price can touch the 886, right? So it requires a lot more patience. Price moving up, touches the 886 here, taken from this high to the low. It significantly reduces the probabilities that this move down is a multi-1-2 and a 1-2-1-2-3. And we cannot count this structure at the moment as an impulse in a 1-2-3-4-5. We also have overlap over here between then a low of 1 and maybe a potential 4, so that doesn't work. And it is too early to count diagonals at the moment, right? For a diagonal, you still need another move up and another move down as a bare minimum. So a diagonal doesn't have the highest probabilities. So therefore, if price can move up, touch the 886 at 13.419, that is the moment probabilities significantly increase, or increase like are going to be even higher, because at the moment the higher probability scenario would be upside, right? And we know the bearish scenario, so it's just risk management. But if you touch the 886, probabilities are more in favor for price to take out this high. It does mean that you potentially miss out on this move up being a 200% move. But from a management or safety point of view, it makes sense. Now, after an 886, right, doesn't mean price just continues and nothing happens. Just like over here, there's always going to be a next retracement. So looking for price to move up, and then after an 886 is touched, the retracements after are going to be buying opportunities according to Elliott Wave probabilities. And then you can put your stop loss either at the low over here, or maybe below an area of support that you identified, or just at the invalidation, which is the all-time low. Now, personally, what I would like to do on lower time frames generally, right, is once an 886 would be touched for a safer setup, I have my areas of support. As price is moving up, I will be able to identify support areas. Those become target boxes. And after the 886 would be touched, I look for boxes to be touched. And those are my areas of entry, right? But of course, also here, if easily risk managed, risk 1% of a portfolio. If the stop loss is taken, right? Look for a swing trade to the upside, take the all-time high. Now that is a setup that is very interesting indeed. It carries a bit more risk because of the bearish potential, right? And a safer setup is all about touching that 886 and then look for entries afterwards. And of course, still look for price to move towards the upside. So this is what I wanted to say about ICP. This is currently what I am looking at. This is, for me, now the highest probability Elliott Wave scenario. Great respect at the 786, the 1-to-1, 2 FIB time as well. Maybe another 4-5 if you really want to deep dive into the lower time frames. Low could be in, maybe a 4-5, but you don't want to touch the 886. Invalidation is the low. It looks quite similar to what SUI showed back in the day. Probabilities for now lower. This for me is a wave C and then a wave A, B, C towards the upside. It would also be quite a big A, B, C compared to previous ranges that we had, right? But we got to be aware that is the bearish scenario. And then you would look for price to just impulse down and eventually take out the low. So yeah, this is what I wanted to talk about. Hopefully you found this video helpful or valuable. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.